2016 should have represented the crowning of Brazil as a major economic superpower. The country's industries were growing at some of the fastest rates in the world, and it had overtaken India and Italy, and was closing in on France and the UK by pure economic output. Life expectancy, access to healthcare and education, average incomes, investor confidence, political stability, global influence, social mobility, and even its currency value were all on the up and up. Beyond just its domestic success, it was promising to be a major regional hub that could lift up the rest of South America by presenting a major local consumer market and trade partner. But by 2016, that was gone. The Olympic Games, which should have been a way to showcase the Brazilian success story to the world, turned into a global embarrassment. Facilities were barely constructed in time, the arenas were surrounded by waste, and the immense cost to host the Games bankrupted the city, and meant the public servants needed to accommodate the Games were on strike while not getting paid. Now, the economic dynamics of the Olympics are a problem in and of themselves, but they've always been a way for countries, despotic or otherwise, to put their best foot forward on the global stage. If this was the best that Brazil had to showcase, it spoke to the major challenges the country was facing, challenges that have not gotten better since. Since its peak, the country has lost almost half of its GDP, and that's having a tangible impact on every other improvement the country made over the 2000s. The country has now also been mired by corruption scandals and tainted by political instability, which will make regaining that success all the more difficult. So, how was Brazil able to become one of the fastest growing economies in the world? Why did it all collapse so quickly? And finally, does the country have any chance of reliving the success of the early 2000s? Like many of you, I love learning about the world around us. I enjoy it so much I made it my everyday job to research economic topics that fascinate me and create new videos for you every week. But even besides economics, there's so much more I'm curious about that I just don't get as much of a chance to explore as I'd like to. That's why I've really been enjoying Imprint. Imprint lets you engage with a range of topics such as economics, finance, philosophy, productivity, and more in bite-sized lessons easily taken throughout your day. It pulls insights from the world's greatest thinkers, best-selling authors, and Harvard professors, transforming their knowledge into visual interactive lessons designed based on the science of learning to effectively help you retain what you learn. Similar to Economics Explained, the app is designed to help you understand complex concepts quickly and effectively. You can fit in a lesson while commuting, having lunch, or waiting in line, as most of their lessons take under 5 minutes to complete. Yet they are super effective, and that's because Imprint's animated explanations visualise the content, making it very interactive and easy to digest. It's also really convenient and easy to navigate on their mobile app. So why not use those spare minutes for actually learning instead of mindlessly scrolling on social media? Currently I'm taking a course on philosophy and have really been enjoying it. So if you'd also like to try out this cool new way to learn, you can visit imprintapp.com/economicsexplained or click the link in the description. The first 200 people will get a free 7-day trial and a 20% discount on the annual membership. Brazil's modern economy has been defined by the challenges it had to overcome that most recently came to a head in the 1990s. The beginning of the 90s saw Brazil take on the serious obstacle of hyperinflation, reaching 56% in January alone, 73% in February, and 84% in March that first year. With mounting pressures and little time to spare, the Brazilian government was forced to take drastic action, freezing prices, opening up investments and trade, and ultimately making the decision to privatise certain industries that had become highly inefficient, thus allowing them to encourage productivity. Another action of note in Brazil's parliament was to call a ban on indexation, which was a system that automatically increased people's wages in line with inflation. Of course, this sounds a bit cruel for the working man, but it slows down something called a wage price spiral, where workers' wages go up, so businesses have to increase prices to remain profitable. A general increase in price is inflation, so that automatically pushes wages up, which repeats the whole cycle, leading to spiralling wages and prices. Now, it's important to note that every economy has raising wages to keep up with inflationary measures, so a wage price spiral can happen without indexation, but that's not the problem. The problem is, when a system like Brazil's indexation automates these dramatic changes, it can make the whole process a lot faster and a lot harder to control. So after making these alterations, Brazil moved on to another phase called the Plano Real, anchoring the economy to a separate, distinct unit of account to reflect relative prices, as the currency had lost its function because nominal prices were increasing too fast. By 1994, following a series of devastating inflationary losses, the government of Brazil introduced a new currency, the real. This was not the first time the currency had been replaced like this since the country gained independence. Hyperinflation was a common occurrence in Brazil up until this point, so much so that if the current currency was traded back through the previous currencies, it would be exchangeable for 2.75 quintillion of the country's original real. So the country needed something a little bit more than new paper rectangles to convince economic participants that this time would be different. Fortunately, Brazil is massive, with a total land area over 8.5 million square kilometres, and on that vast land are vast amounts of resources. It also doesn't hurt that their workforce stands at a staggering 108.4 million. Almost all of them are incredibly cheap hires, so it had a lot of easy exports and cheap labour to process those exports. Now, of course, Brazil was an export-led economy to begin with, but it received a significant boom starting in the year 2000 thanks to its new, more stable currency, more productive privatised industries, and most importantly, huge demand for its natural resources coming from a rapidly industrialising China. Before the boom, Brazil was in a series of crises. Constant political instability and corruption paired with the mismanagement of funds made it an undeveloped economy. But this radical rise in exports made it look more like an advanced economy within a decade. Also, while major countries scrambled desperately to handle the 2007 and 2008 global financial crisis, or GFC, dealing with the consequences of unregulated financial institutions, Brazil managed to insulate itself after the initial hit by relying on said export of raw materials, primarily to China, which had just initiated a colossal economic stimulus plan amounting to $586 billion. That money went to fund a massive building spree to dig China's way out of the crisis, and it meant it needed raw materials which it got from places like Canada, Australia, and Brazil, all of which are countries that actually did okay during the GFC. It also didn't hurt that Brazil's financial sector was relatively basic at the time, having only been rebuilt in the early 2000s after the hyperinflation crisis. So it avoided the fallout that came from messing around with the advanced financial instruments that blew up the financial sectors in the USA and Europe. In fact, its GDP only fell by 2.9% in the last quarter of 2008, and then by 0.9% in the first quarter of 2009. From then onwards, the economy quickly returned to strong growth. By sheer coincidence, just 2 years before the GFC, Brazil had finished carving out a portion of the Amazon rainforest the size of California for natural resource extraction. This is, for many reasons, a controversial and ongoing method for extraction, but it did lead to rising profits. In these areas, there was a veritable cornucopia of valuable materials, including iron ore, bauxite, manganese, and gold, not to mention the lumber itself, which was also a valuable export. It also discovered what is popularly known as the Tupi oil field, the largest recently discovered hydrocarbon source in the Western Hemisphere. This find contained 8 billion recoverable barrels of oil. In other words, this was the discovery that allowed Brazil to transcend from a notable regional player to a total powerhouse, albeit with all of the political turmoil that often comes with it. But this begs the question, if Brazil found its way out of the largest economic crisis in modern decades with massive amounts of natural resource both on sea and land, what caused the crash? Well, as much as we're trying to avoid it, this is where the politics come into play, and the picture isn't pretty. It all comes down to the woefully dark side of regional governance. Brazil is made up of 26 federative units with 26 states and 1 federal district. The 26 states inhabit what are referred to as 5 regions: North, Northeast, Central West, Southeast, and South. This may go without saying, but when a regional nation-state is cohesive, collaborating for the common good of the whole, elected officials often act with the public interest at heart. Regional governance can be a really good thing. The USA, for example, has a lot of inbuilt diversity and redundancy in governance and economic policy between its states, so that one bad idea can't bring down the collective system. But that's if everything is working as intended. However, if this cooperation breaks down and there's a potential for easy profit related to resources, well, now one lives in a system that serves itself. For Brazil, this all came to a head in 2014 when an infinitesimally small investigation regarding money laundering at a local car wash ballooned into what some refer to as the largest Western political scandal in modern history. It started with the arrest of Nestor Severo, a former executive of Brazil's national oil company Petrobras, a mega corporation that many foreign investors wished to collaborate with in the early 2000s. This little arrest seemed simple enough. Assumptions were made by both parties, with Severo expecting freedom by the morning, and the arresting agent suspecting that Severo may face charges but would eventually pay his way out. But something strange happened, something neither of them nor the Brazilian public could have foreseen. When the first stone finally turned, it became apparent that Severo was actually part of a much larger network of corruption in Brazil. A federal investigation, fittingly codenamed Operation Car Wash, would set fire to public trust as dozens of high-level politicians were indicted for embezzlement. This was a travesty, as Petrobras had previously been dubbed the largest enterprise and a symbol of the country's entrenched economic nationalism. By June of 2015, a massive scheme to defraud Petrobras on contracts to develop the so-called pre-salt oil reserves found offshore in 2007 had appeared on investigators' radar. Moreover, reports suggested that federal prosecutors were also looking into the electricity generation sector, pension funds for employees and state-owned companies, and the National Bank of Economic and Social Development. It compounded with an investigation initiated in 2005 carried out by Brazil's public ministry, the country's federal police, and the Brazilian Court of Audit. The Cash for Votes case involves some $43 million siphoned from taxpayer wallets. And upon further inquiry, so much money was discovered to be stolen that lost faith in Petrobras alone caused the Brazilian GDP to drop by 0.75% in 2015. Some $2.1 billion was allegedly redistributed in this manner for the personal gain of the scheme's operators and to finance campaigns of dozens of politicians. The company's former director of refining and supply confessed to having received bribes and agreed to pay back $23 million. Watching an endless slew of corruption cases flat out daily not only undermined domestic stability, but international confidence in the country as a place to invest and do business as well. The problems continued when this event coincided with a drop in commodity prices, which slowed the country down even more and showed the whole country was basically only held up by being able to export raw materials to economies that actually were building themselves up in Asia. Brazil was hit particularly hard by falling commodity prices because of the basic nature of its position in the world. Compared to Canada, Australia, and Russia, Brazil has no direct sea routes to Asia without crossing the Drake Passage, the roughest and most dangerous sea route in the world, or going through the Panama Canal, which has become very expensive, with the authority increasing tolls significantly even before the water crisis started. When commodity prices were high and margins were healthy, this extra expense wasn't a major issue. But when they fell, Brazilian resources were the first to get cut. This doesn't even address the other major elephant in the room. The Brazilian landscape is vast with equally vast resources, but that itself comes at a cost. It's easier and much cheaper to transport raw materials over deserts or tundra like Australia, Canada, and Russia, but it's much harder to transport things through dense rainforest. It's also a nearly impossible problem to solve. Various governments have made efforts to ramp up deforestation, but this comes with yet another cost, considering any efforts to expand the patchwork in the Amazon are often greeted with global backlash. In fact, the European Union stalled trade relations when Brazil made efforts to clear a path, forcing them to try and reach another alternative. An example of such an alternative would be the government's response by cutting interest rates and raising spending, which is normally the answer to stimulating a slowing economy, but that only works when the issue is consumer confidence. It won't fix a fundamental problem with how the economy makes money. As a result, Brazil witnessed the collapse of other local industries as a lot of money left the country, and as is the case with any nation, when the money leaves, skilled employees often leave with it. People are calling it the Brazilian diaspora, but it essentially boils down to a devastating brain drain, with Brazilian media reporting education and investment in science and research has been an obstacle to the work of highly qualified professionals in the country. Faced with fewer resources, cutting-edge researchers have been looking for better opportunities abroad. Many of the immigrants are finding their way to the US, but the country that issued the most work, study, and business visas to Brazilians was China. According to the Fragment data, the number of Brazilian immigrants moving to China has increased by 321%. Interest in the country of Paraguay also grew by 175%, with competitive university programs, not to mention incentives for companies and tax cuts. There is currently very little Brazil can do to retain its best present and potential problem solvers, except for try and play the same game, one that isn't working in their favour. Lower taxes and increased spending have saddled the country with more debt, and the value of the real has fallen, making it harder to service that debt through taxation. Up to the present day, according to the Treasury, Brazil's central government posted a larger than expected primary budget deficit in May, pressured by increased pension benefits. Government spending also rose by 14% in real terms from a year earlier, driven by an uptick in pension benefits compared to a 9% increase in net revenues. Negative growth, high government spending, rising prices, devaluing currency, and lower tax receipts are a dangerous mix, especially when compared to the situation the country was in less than a decade ago. The Rio Olympics is a perfect anecdote here. Although the festivities looked good momentarily for Rio and the rest of Brazil on paper, the press had a field day when images came flooding in showing the aesthetic juxtaposition between where the event took place and the slums around its borders. Later reports came in regarding how they created enough space, and that didn't help the situation either, as journalists documented how impoverished families were kicked out of their homes, only for them to be demolished for various competitions. Of course, this is representative of the ongoing crisis Brazil continues to grapple with. Tough living conditions have undermined political stability, perhaps best demonstrated by the violent scenes in Brasilia after the last election and ongoing corruption scandals. So with the flight of investors, the brain drain, the slowdown of exports, the collapse of local industries, and hordes of furious citizens, does the country of Brazil actually have any chance of reliving the success of the early 2000s? Well, the short answer is yes, it very well can. Now, of course, nobody can predict the future, least of all economists, but with all the bells and whistles of the initial boom fading away, Brazil still has resource abundance, which means the export game, though currently troubled, can experience a rebound effect in the coming decades. It also joined other nations to make the BRICS, an intergovernmental organisation comprising Brazil, Russia, India, China, South Africa, Iran, Egypt, Ethiopia, and the United Arab Emirates. This may seem, from certain angles, like a poor, isolating decision to make, but it could make it a preferred trade partner with China, which is still by far its biggest customer. That said, from an economic perspective, avoiding confrontation and promoting mutual irritation amongst rivals theoretically makes BRICS a masterful move if done correctly. The international pressure to counter the BRICS could also see favourable trade with the USA, which presumably doesn't want any prominent rivals threatening the US dollar. The country is also geographically much closer to Brazil, and itself is going to need a lot of raw materials to carry out the major infrastructure development it has planned through Building Back Better. Growth is also returning after the pandemic, and even though it's a bit slower, that might be okay. Fast economic growth often isn't the most sustainable. Slow, stable economic growth is preferable over huge booms and busts. So Brazil is a country battered and bruised by decades of political deception and economic mismanagement. It's a nation that, for all of its bountiful resources, has had much difficulty harnessing this power for long periods of time, and it's a land that's lost the faith of many of its people who are considering living life elsewhere. That said, politics change with the winds of public interest. Working harder to build back that stability and confidence can do a lot to let the country live up to its very real potential. If the BRIC strategy is approached with caution, exports can be revived, and they are already coming back stronger than ever. And as for the brain drain, well, everybody talks about how they wish to seek life elsewhere, but there is no place like home. With major contributions to safety measures, infrastructure, housing, and the like, there's no reason Brazil can't, like many other countries, create an environment that encourages up-and-comers to return to the fold. Brazil has been through this cycle many times before, but just like there's no reason to think that this time will be any different, there's also no reason that it has to be the same. Thanks for watching, mate. Bye.